I'm watching the same thing I've been watching for the last couple weeks, which is the 542 lows and the 550 highs. The daily SPX strangle working out pretty well. Just reviewing the portfolio. I'm trying to clean up. I'm really trying to clean up some profits. Just scrape some profits, even if it's a little bit early. Get some additional buying power back, and just trying to think over the next, let's say, let's go E-mini futures here. Oops, not ES. ES is there. So over the next, 30 to 60 days, I mean, part of me is wanting to have just a little bit of a pullback so I can start positioning out of the money. But if I don't get positioned now and we just go up higher, I'm just going to miss out. So I think there's ways I'm still going to look to generate some income, give myself some cushion. I actually had a trade constructed this morning that I could take the E-mini futures S&P, there's the ES ticker, all the way down to 5090. 5090 would be where my trade was, quote, threatened, which would be about 7 to 8% lower, and I could still generate about $450 a profit over the next 30 days.
Do you think there's a potential downside, coming? Do you think are you more betting on the downside, or are you more thinking
no,
yeah?
I just want volatility, man. I mean, what I am positioned for on the SPY and the Qs, I'm positioned for some movement by the end of July. I think we have the CPI gap right here at 537, and it's pretty notable. Like the SPY, the CPI gap we had a couple weeks back, we've been in chop for 2 weeks. Price today, not much. Price tomorrow or yesterday, not much. FOMC meeting minutes Wednesday, non-farm Friday. It could be noisy, right? But I just think it technically we're due for a correction. I think the market's still pretty well supported. I don't know how big of a correction we get. I mean, historically, July's pretty bullish. Historically, it's low volume in the summer. I don't know what Powell would be saying to rock the markets. I don't know what the minutes would release tomorrow to rock the markets. Probably nothing. I don't think. And so I just wonder if and you and I have talked about this many times in the show. Can't we just go sideways for a little bit? I mean, sideways is actually okay. And so there's ways to generate profit going sideways. And I think that might be my best option right now, which is just, look, man, if the market goes sideways, I'd rather go sideways to lean slightly bullish. If it goes up and goes to infinity, okay, I'll miss out on some of the alpha. But it's like, if I'm just generating income, we're going sideways. It's a lot easier to be collecting income on a variety of instruments over the next, let's say, 30 to 60 days of this happening, as opposed to trying to get into the trenches and grind out a futures trade every single day, or grind out a 0 DTE and try to trade direction when you're not getting it. So yesterday I traded gold and futures, gold futures, silver futures yesterday. So that was my kind of big trade yesterday. Is like, yeah, I just like where it's at. I think gold still looks good, silver still looks good. I'm just staying out of the way, trying to buy low, collecting income, lowering the cost basis. But I really do want to do something on the indexes. It's just I don't want to get overextended for what seems to be top heavy.
Yeah, I'm kind of in the same camp. I've got this XLK position. I've told you about this in the past too.
Okay.
I still have those calls that I've sold. I've made nothing in terms of gains on this because I've capped my upside with the covered calls. But it's actually looking like if this thing has any downside in the next few days, I might actually be able to stay in my position as well as have collected some premium. So we'll see. I wouldn't mind if the market pulls back a little bit, but similar to yourself, if it does not, if we rip higher, then I just take profits basically. So kind of in the same camp, and we'll see where tech goes. But to be honest, if of all the sectors right now, tech and energy are the only two that I have in the account right now. Would like to build out positions, but I need to see growth and inflation cooling for that to really make its way into my account. That's kind of my position. I've stayed out of a lot of other sectors and things while I wait to see that. Again, I'm a little bit concerned that the narrowness could continue, but I don't think that ends well if you don't see broadening and inflation coming down. So I don't know. That's where I'm positioned. I think sideways is reasonable as people try and figure out, is this economy going to cool or is this economy going to accelerate? I think that there's probably a in between that we stay for a while on.
Yeah, that's a good point. Are you in XLK XLE as a bit of a hedge? Not a hedge, but like something where one is going to offset the other, right? Tech is up, energy's down, energy's up, tech is down. Those have been nice to kind of have non-correlation, where like the worst days in tech have been the best days in energy, and kind of vice versa.
Yeah, I've got energy. I bought XLE on this little dip recently. I liked the kind of breakout of this downward trend.
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
Oil's been on the rise recently, maybe not so today, but we've had a strong increase in oil. Also, yields following the debates have been creeping back up. It's not been good for my TLT position, but it is also something to note that if a Trump presidency happens, it could lead to concerns about inflation. They were discussing that a few minutes ago, actually, on this panel, discussing the effects of import taxes. Could that be inflationary? Could that hurt the relationship between or could that hurt Europe? And just thought that was interesting. I mean, the concerns about inflation, I think, regardless of who you get as president, they both have a track record of spending a lot of money, and that's not even a disputable fact. They both spent a ton of money during their presidencies.
Sure.
Obviously, you had the pandemic smacked in the middle for both of them, but again, I think that it is there is some concern in terms of the inflation reacceleration idea that, as Jerome Powell mentioned earlier, is outside of his decision making. They can't decide what government policy is. They can only decide, what to do with their Fed funds rate and QT or QE.
Yeah, I mean, he can say that, but man, there's going to be a big impact on what that combination looks like, right? I mean, you can have all fiscal, you can have all monetary, but we have had a lot of monetary without fiscal. And just this last, 3-4 years since COVID and since the Fed's been tightening in a way, we've had a lot of fiscal without monetary. So I still think they go hand in hand as far as the best picture moving forward is probably going to have to be some balance between the two. And, the Fed's been pretty vocal and transparent about where they want to be, whether they can do it and orchestrate this soft landing, no landing recovery. We'll see. I'm going to take a second here too. I mean, I'm looking right now for asymmetry in the market, right? I mean, the trades that you have on, the trades that I have on, that I'm looking for, if I'm going out the next 1 or 2 years, where do I think the most upside is? Is it in U.S. equities? Is it in the U.S. broad market? Because I think not. Like, I mean, I think that we could be steady. I mean, that's never been the problem, is the U.S. economy, just churns along, and we see, 8% a year, 10% a year. We've come out of terrible crises with huge upsides. 2020, we came out of 2022 at the end of it with a really good 2023 and what's been a pretty good 2024 thus far. And I still think there's going to be better opportunities elsewhere. I mean, there's ways to participate in the U.S. always, but I don't know, man. I'm looking elsewhere. I feel like, positions in gold, positions in silver, gold futures, silver futures, crypto possibly, but we need, like you and I've said, I mean, risk on needs to be a factor for crypto. I mean, Bitcoin is vulnerable at if we break below 55,000 on Bitcoin, I would say we're very vulnerable to the downside, which would not be good. I think that level has to be defended. buy the bulls if it's not, and we see a strong break below that without being a bear trap, then Bitcoin gets really ugly really quickly. So I'd like to see just levels kind of maintained, but like I said, I mean, if I'm looking for where's my opportunity to make a 20, 30, 40% winner, where's 100% upside on a certain position, I mean, a lot of my picks are not US, unfortunately.
Yeah,
So,
and for me, even if I'm in the US, I was just putzing around yesterday with Gemini, the Google's AI thing, and I was just asking Gemini about the long-term performance of growth stocks versus value stocks, and it was a really fascinating thing just to kind of use the tool for that purpose. And what I found is that a lot of value, or over the very long term, value stocks historically have outperformed. And that's kind of hard to believe in the recent years, because it just seems like everything that's exciting, AI growth, whatever, just gets pumped. But if we enter into a period of sideways market, or we enter into a period in which uncertainty prevails, like there's just not easy monetary policy, and there's concerns about the world and what's going on, and you don't have massive growth and tons of stimulus. If that changes, value stocks are probably the place to be, because then suddenly people will fall back on predictable earnings companies, which is value. And again, it sounds so crazy in recent years because everything is just about growth. But the long term, there are periods in which, we've talked about this many times, Chris, like value can certainly have a long stretch of outperformance. So let me just listen to JP.
Sustainably, durably underlying inflation between 2 and 2.5 is what I would say. That would be a great outcome.
Headline PCE.
Yeah.
President Lagarde, 1 year from now?
1 year from now, I would say low twos. We are at 2.5 latest reading, and as I said, bumpy on the way ahead, but yeah, low twos.
You've been closer to 4%, President Campos, right? Like,
what did
President Lagarde?
That would be underlying inflation between 2 and 2.5 is what I would say. That would be a great outcome.
I think it's a 1 year forecast, I think, Nick, where they want to see a year from now.
The
1 year
work
headline,
has
2
been
to
done is
2.5
very
for
technical.
core PCE. Got it. Or headline
I'm
PCE.
confident that we will continue to be that way, and I think.
Yeah, interesting. I don't know. Sorry to cut you off, Chris.
No,
So,
at first I was
talking
thinking,
about
like,
this
did he just lift the inflation target? Did he just say we're accepting like that 2.5 and not a sub 2?
Yeah,
but I think it's just what their forecast is for 12 months out.
Yep.
So I think my plays are China. Options exposure. I mean, if you pull up a chart, Nick, you can look at FXI, you can look at KWeb, you can look at HSI, you can look at Baba, Baidu. I mean, fundamentally, Alibaba and Baidu are pretty darn strong. They make a ton of cash. They have a ton of cash. They're in good financial positions. I think the difference here is, and can you go to like a weekly chart? I'll just look at your screen so we can keep the stream pretty. So that is a weekly chart on FXI. Nice double bottom. We also had some decent structure where you could draw a lot of trend lines there that have been breaking, right? Like a downtrend line that's been breaking, and it looks like price made a convincing breakout come like March, April. But we're clearly in a pullback. I mean, I was a little surprised to see such a big rip in March in China, and then have it really retrace a lot of it. Like FXI has retraced a little bit, but if you look at Baidu, if you look at Alibaba, they've retraced most of those gains, right?
My goodness. Wow.
That's ridiculous. I mean, we had an interesting start to those, and that's back again, like I guess March and April, where we had the big runs, and it's completely retraced. So that was surprising because I mean, again, it's me trading. It's not like the market has to listen to me, but I was really patient on those setups. So because I'd been kind of dabbling, and I was in early, and then it got to the point where I'm like, okay, I'm clearly excited about position. I'm excited about the the upside opportunity, but the timing of this could be a year away, could be 2 years away. We might have to see. I have no idea, man. I mean, do we have to see a new president? Does Trump come in and all of a sudden have this great relationship with China? Doubtful. I feel like we
The
go
trade war was a Trump thing. So
right, and also I think that we go way more nationalistic. We go way more deglobalized if Trump is president versus Biden, or if there's going to be a new Democratic nominee. I have no idea. But anyway, I mean, it's going to be rough, man. I mean, whatever happens, for better, for worse, I mean, we're going to have to figure out how to navigate it. I just think on my end right now, it's like, it's slowing down. I'm generating some income. That's really my focus. I think what I'm looking at position for is I want to concentrate, get out of some of the fluff, take out some of the exposure. I'm experimenting with some new hedges, where, you know, when we talked about growth and value, I mean, is value truly outperforming growth, or is it just not losing as badly? Like when value is outperforming, I don't feel like it's necessarily making you money. I think it's just protecting you and keeping you out of trouble.
yeah, well, you know, there one that comes to mind is just an example is like Target, right? Target actually, in, you know, if we go back just as an example here, in the 2000s, we talked about this recently, the long kind of sideways chart that was the you know, the S&P 500. The Nasdaq was way uglier. You're kind of right. Like, there's, let's say you bought it in 2000 and you held it all the way to 2010. I mean, it's up, but you know, the S&P 500 during that same time, let's just do that as an example. S&P 500, if you bought in the 2000s, right? So if you bought 2000 and then held to 2010, you're down. So
Yeah.
I mean, that's a 10-year stretch where you would have been
It would suck either way.
down. Yeah. So you would have suffered less. I mean, it's not like it's
Sure.
exciting, but
Sure.
you
But there
know,
have been some that have like, look at Alcoa, or look at CLF, Cleveland Cliffs. Look at like you know, a producer. So CLF is Cleveland Cliffs. This is steel. Look
mhm.
at that, 2000 to 2010.
My goodness. Yeah.
And
look at
that's
crazy
that's what
chart.
I would be getting excited about, is stuff like that,
That's crazy.
right?
Yeah, and see, that's the thing is, I think that, you know, I've said this so many times on the stream, but you know, we are in a 15-year just exceptional period for the stock market, and if you're talking about doing this for the next 30 years of your life, 40 years of your life, we're probably going to see environments that are not so, truthfully, very easy markets
Sure.
if you have tech and long, high risk stuff. But again, throughout history, there are periods where the high risk stuff is just a waste of time. It's dead money for a decade. So I do think that that's an argument for some level of diversification, or for at least, you know, in your case, what you talked about, like yielding stuff, maybe dividend plays, maybe, you know, selling options for premium. Like, again, I talked about my, about this with my dad sometimes. And we, you know, talk about how gold dividends, yielding stuff, look silly until they look genius. And,
Right.
you know, there will be a day. Is it going to be soon? I don't know. I think that growth could still do its thing for a while. I'm not calling it top by any means, but understand that, you know, when the tide shifts, I will certainly be making plays in favor of value, and you know, keep some growth in there when it's really oversold kind of stuff, but just be careful when it's so hot and exciting.
Agree. And you know, easy ways to play it too. It's like there's an S&P growth, there's an S&P value, there's a, you know, Russell growth, Russell value. So I agree. I mean, there's ways to play both. I think as we see the market go sideways too on the SPY, I really think the structure is very clean. You know, I would personally love to see like a 2 to 3% pullback. Possibly if we still fill the CPI gap, that's like 3%, maybe 3 and change. But the floor isn't broken. You know, I mean, the trend that we've been seeing since October of last year isn't breaking. The little pullback and the rip we had from April's pullback to May's push and drift in June, I mean, nothing is breaking. So, like I said, I mean, it's July. I mean, we've been seeing nothing but trends basically since 2019.
Yep,
2018
exactly.
was a steady uptrend. 2017 was the 1 year in history that the S&P went up every single month and never had a down month. It was like the weirdest, slowest grind melt up, but it wasn't a huge year. And then 2018, we had that 20% dump at the end of the year. 2019 was Fed backstop. It's like we've seen nothing but just crazy highs and lows and booms and busts, and the Fed's backstop and everything. And it has made the market so sensitive, man. I mean, it's like the economy shouldn't be the most exciting thing in the world. It's like, it's nice it hums along. It's nice it does its thing. It's nice that we see a 54% baked in bias. So I guess outside of a black swan, outside of something we clearly can't control, trades that I'm doing are either trying to position for ownership way cheaper, trying to generate income if we go down a little, sideways, up a little, up a lot, and just keep trading, man. I mean, I guess when you have profits that are rolling in regularly every 30, 45, 60 days, it offsets your trouble. If you've got debit spreads, like bear put debit spreads that will help you hedge a little bit, it helps. I mean, so I guess that's what I'm looking at, is I'm just going to continue to kind of engineer my my profits where I have steady income, but I also have some hedge plays or down plays where if we do have a turn, I have things that can pay pretty well. And what I do own, I wish I could say that everything I own, I'm just looking for unlimited upside, but I've got covered calls on pretty much everything, and I've got puts and everything, and I'm just trying to try not to lose my butt. I mean, if they're going to turn, I don't want to see my P&L fluctuate. If we go up, I want to see it be steady. If we go sideways, I'm going to be steady. So that's just what, I don't know, man. That's what I'm feeling in the market right now. I need to be really protective at this point in time. And it's not like there's a top around the corner. I mean, I'd like to think that by the end of the year, regardless of what we deal with, the market's going to try to do its best to go higher. I think the Fed is potentially able to break it. If the Fed doesn't raise rates, I mean, we haven't talked about oil this morning. Oil is up 17% from the low in June.
Yep.
Nobody's paying attention to this. And all of a sudden we're talking about inflation. Powell forecasts out 12 months and says 2 to 2.5. Well, what about the numbers on actual and CPI data? What about core is excluding energy, excluding food? Well, what about energy? Because we've just seen it rip up 17%. I noticed at the gas pump, everyone notices oil prices are higher, gas prices are higher. That's sticky, man.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.